Welcome to Biztech's Asian Midday Marketwatch. Our guest today is Kelvin Wong, market strategist at CMC Markets. Now, Kelvin, thanks for coming in, especially on this Friday just before Chinese New Year.
Yeah, good Friday. So my pleasure. Yeah, Brian. Yeah.
Now, Kelvin, before we get your insights, let's take a look and see how crypto markets are performing first. Bitcoin is at 37,147.7. It's up 3.34%. Ethereum is at 2,427. It's up 1.38%. Now, over at looking at regional stock markets, we're going to start close to home with the SGX. SGX is at 3,268.27. It's up 0.25%. Now, if we look across the region, we've got the KLSC, which is at 1,520.47. It's up 0.3%. Shanghai is at 3,394.01. It's down 0.01%. The ASX All Ordinaries is at 7,260. It's up 2.05%. The Nikkei is also up sharply at 26,710, up 2.05%. The Hang Seng is at 23,527.12. It's down 1.16%. And rounding off the numbers, we've got the Kospi, which is at 2,652.44. It's up 1.45%. So, Kelvin, what's your view on the state of global markets, especially regional markets this morning?
So if you look at the current situation we are facing right now, it seems to be that overall the region market in Asia seems to be pretty positive as a whole in general, with the exception of Hang Seng. So later I'll touch a bit on Hang Seng is perhaps due to this upcoming weekend key data out from China, which is the China PMI manufacturing and non-manufacturing PMI data for January. All right. So if you look at across the board over here, it seems to be that market is actually looking for some kind of catalyst for the US market to actually shape at least a potential short to medium term rebound after we start to see a very steep fall on Monday, especially on Monday itself, and also driven by the fears of more hawkish Feds, which indeed during this week of the latest FOMC meeting, Powell actually tilted towards a more hawkish side of the story, where he actually did mention he didn't rule out saying there's a possibility to actually hike in every meeting from March. So that's what talking about a possible of 6 to 7 hikes before 2022 end. So that give about scare to the market to see. But what's interesting over here is the key major stock indices for US. Yes, it's a bit jittery this week, but they managed to help right above or tested and help key support levels so far. On the SPX 500, which is the S&P 500, is at 4240. Then the Nasdaq 100 is at 13,900. And what's interesting over here is that earlier this morning, Apple actually reported its past quarter earnings, which actually smashed expectation, and that could also
it is its best quarter ever, yes. Right? It grew 11%.
Yes, it's the best quarter ever. It's all-time historical best performance in terms of quarterly data release. So what we could see over here is that Apple itself, why Apple is important as firstly psychologically and as well as from an index perspective, is because Apple itself is the highest component weight in the S&P 500 and the Nasdaq 100. So that being said, right, if Apple could actually showcase such stellar performance, it could actually potentially add into a positive feedback loop into the US stock market, given the increasing odds of at least a potential rebound in the short to medium term from this juncture, actually right at those key support levels that I highlighted earlier on, which actually flow on to this positive, we call it sentiment that we are seeing in the Asian stock market right now. And do not forget, on top of that, right, if you look at the STI actually felt relatively well. So you look at the STI, seems to me like a defensive market. So they only fell for this week so far based on current prices. It's only okay. Let me have a quick look on the STI. It's actually down for this week at only 0.8%, less than 1%, despite the tremendous amount of fear that the Fed is about to actually embark on more hawkish stance. So
But
one of
there's
the
also,
reason why,
Kelvin,
yeah,
I think there's also
yeah,
some positive news flow from one of the component stock
yes,
on the
yes,
SPI, which is DBS has agreed to buy Citigroup's consumer business in Taiwan. So they're paying about
yep,
956 million Singapore dollars. So that
mm.
would make DBS Group now the largest foreign bank in Taiwan by assets.
Oh
And so
yes,
that's had a
definitely.
positive spin, definitely.
Correct. So that actually helps. We call it this positive news flow. Actually, help the STI actually to actually negate the this week of negative sentiment that is being triggered by the implied or the market expectation of a more hawkish tilt by the U.S. Federal Bank.
Now, Kelvin, looking out for data coming out this week, I think we've got
Mm,
US personal spending for December and the US PCE price index for December as well. What should we
yes.
be watching out for?
Okay, so right now, right, the state of concern in the global market space right now, we talk about global macro risk. So the big global macro risk right now is the risk of stagflation. Okay, stagflation as in higher inflation, and in this inflation may remain sticky for a while. All right, so definitely we'll be looking at numbers for the PCE price index. So this index is a kind of one of the, in fact, is if based on the previous all the while historical in the Fed press conference, they tend to actually monitor the PCE price index than the normal inflation, the CPI data. So definitely this one is above 2%, way above 2%, based on their normal target. So what market are expecting is at 5.9%, which is pretty high to coming forward into this month of December. So if we start to see a high print at 5.9% or start or at 6% or more, so that could actually keep the kind of elevated inflation fear in the market. And talk about inflation, right? Inflation is, yeah, we see high inflation, but unfortunately, right, during this period of time, right, inflation don't go hand in hand with high growth. It goes hand with subdued growth. So if we look at the so the what the deal with this personal spending, which is U.S. consumer spending in a way. So this U.S. consumer spending is also definitely important. Why? Because U.S. itself is a number one, is still a global economy, and their consumers actually has an impact on how they spend or how their behavior has an impact on all of us, the whole
Yes,
in terms of they have a significant impact on what we
exports
call
and
it
stuff.
economic growth. Yeah. So if you look at personal spending, right, the month-on-month in December, so what market expecting right now is lesser than what we have in in November. So November came in at 0.6% month-on-month. So for the forecast, right, consensus is pegged lower at 0.4%. And if you look at the trend, right, it has been in the lackluster trend, below. It actually fluctuate. It has been a lackluster trend so far over here. Uh, it didn't grow above the 1 point, we call it the 1.5% mark or even the 2% mark since April 2021. So that is a pretty what I call lackluster consumer spending in US.
Mhm.
So that is a concern about this stagflation risk that is growing, that is getting louder and louder by the as we head into 2022. Yeah.
And how about the US dollar? I mean, what's your view? I think
Yes.
it seems to be the biggest winner post FOMC.
Yes, so let's take a look at this chart of the technical chart of this US dollar. So what we could see over here, right? Since May 2021, this is the major uptrend. It's still intact, except that for over, let me zoom into this area here. During the high of November last year, all the way down to the low of early 30th of January 2022. Uh, yes, it came down, but it managed to help at the key support of 94.65. Then what's interesting is that after, in fact, on the 26th of Jan, which is before the FMC minute, before the FMC minute over here, it started actually to shape a bullish break above this descending trendline resistance that has been capping previous rally since the high of November 2021. So with this clear bullish breakout, right, what we could actually imply in terms of sentiment, right, is that this major uptrend is still intact, and right now it's actually is resuming its impulsive up move within this major uptrend, which could take us potentially much higher towards this 97, 70, 98. A break above should take us to the top of this upper boundary of this major ascending channel, which is 99.25. So it seems to me that what happened after the post FOMC we call it the press conference right after the press conference of FOMC, whatever Powell has starts to actually kind of a guide the market. It seems to us that over here is that yes, a more hawkish Fed means they may start to do more than what market is expecting. So inflation now is their concern rather than to actually look at the stock market. So i.e. right, they don't mind. It means what they imply is that they don't mind to have a stock market that is soft. Why is it soft? Because of higher cost of funding through what I call more hawkish Federal Reserve policy via higher interest rate. But overall, that could actually benefit on the dollar perspective, because what market now start to price over is that the dollar may start to the Fed may start to do more than the rest of other central bankers.
Now, Kelvin, as always, thank you very much for taking your time to be on your show, and thank you for your insights.
My pleasure, Brian.
Now, we've been speaking to Kelvin Wong, market strategist at CMC Markets on Biztech's Asian Midday Market Watch. I'm Brian Fernandez. Please check out this video and podcast on our various platforms, as well as our website, www.biztech.asia. Please like, subscribe to our various platforms. Thank you very much for tuning in.